So we have this China issue, and we still don't know what they're going to do, what the Chinese are going to do, which has investors obviously extremely uneasy tonight. And we have the interest rate hikes, which also have already spooked the market and may continue to do so, by the way, as I mentioned a little while ago, because there might be another hike sometime around December 19th. So, for a look at this, who better to talk to? I'm joined now by stockbroker and financial commentator Peter Schiff. He and I have had similar conversations like this one before. Peter, did this market, it bounced back today at the end of the day, but what I'm hearing is, and maybe you can confirm this for me, is that the reason it started to bounce back is because there's now word coming out of the Fed is that they might suspend the December 19th hikes. What are you hearing?
Well, actually, that's not what was said. I think they're still telegraphing that that hike is on target. What the Wall Street Journal article said was that the Fed is maybe going to take a wait-and-see attitude after that hike, and so maybe we won't have as many hikes in 2019, and I think the market rallied on that. But look, you know, the news last night of the arrest of the Chinese executive, that might have been the catalyst that sparked the sell-off, but this is a bear market. That's why the market went down. If it wasn't that, they would have found another excuse. If we were in a bull market, I think the market would have shrugged it off. So we're going lower, but the bigger point here is that the U.S. Flexing that type of muscle is going to backfire. I mean, the dollar having the reserve currency, that status is in jeopardy. And I don't think the world likes giving America this type of power, that we can impose our own rules and then demand that the entire world live by it. So I think this has a much bigger and broader ramifications other than what's going on in the stock market today. I think long term, this is going to undermine the dollar and its role as the reserve currency. Yeah. And when that goes, so does the American standard of living, because it'll collapse.
What seemed to me today was that the biggest shockwaves were coming, especially at first at the onset of this thing being announced, from both the Asian and European markets. Why is that? Why were they so, to coin a phrase, shocked by this?
Well, first of all, remember, there's a lot of trade tensions out there. People are hopeful of some kind of peaceful resolution to the trade war. Yeah. I mean, now there's some kind of truce, and obviously some kind of diplomatic incident like this can throw a monkey wrench into the whole situation. So the market is already on pins and needles, again, because this is a bear market. If the market were healthier and going up, again, things like this could be shrugged off. But when you're in a bear market and people don't recognize that, they don't want to admit that, but you get this type of reaction to news. And I think the rally that we had today is not going to hold. What's the move back off the lows? We're going lower.
What's China going to do? What do you think they'll do? And what will happen if they do something?
I don't know. I don't know what they're going to do specifically in response to this. I mean, China has a right to be upset, and I don't know what they're going to do. But I do think that China is in a much better position than is generally believed. People think that we have the upper hand because, you know, we have this huge trade deficit with China. But I think it's the other way. I think the fact that they supply us with all this merchandise that our economy needs, and the fact that they hold a lot of our bonds and continue to lend us a lot of money so we can live beyond our means, they're the ones, I think, that call the tunes, and we have to dance to it.
But their economy is somewhat wobbly as well, isn't it? Everything I read says they're not exactly in a perfect condition right now.
Nobody's in a perfect condition, least of all the United States. You know, I was listening to the broadcast before I came in, and you talked about how the U.S. economy was sailing along. It wasn't sailing anywhere. It was blowing up like a gigantic bubble. That's what was happening. And now the air is coming out. We are headed for a much worse financial crisis than the one we experienced in 2008, and we are headed for a much greater recession than the one we lived through following that crisis, the one that we call the Great Recession. And what's going to make it so much worse is it's going to be inflationary. Consumer prices are going to be going up as the economy is going down.
Yeah, and the point I was making is it was good times in terms of what the Dow was doing and the economy was doing, but you're absolutely right that most people are saying it was all artificial, which I think is the point you're making, correct?
Yes, it was. It was all a bubble. I mean, Donald Trump said so when he was a candidate. He said it was a big, fat, ugly bubble, and he was right. And he inherited that bubble and proceeded to make it bigger. And so now it's going to pop on his watch, and that has some dire political consequences as well as economic consequences, because that's why I think he's going to be a one-termer.
Stockbroker and financial commentator Peter Schiff, it's always a pleasure. Thanks so much, my friend, for joining us here once again.
Thanks for having me on.